What's going on, guys? I want to go over a trade that I just took here and I thought it'd be a good teaching moment. We're looking at the NASDAQ chart. We're looking at the 5-minute time frame. We're also looking at a lot of things going on in the chart, right? So I'll kind of cover the basics on what is most important on this previous trade that I just took. Now, this previous trade that I just took, very, very good trade. You don't get these type of trades often. They're more of a momentum style trade where you're kind of taking the reversal of what the bigger move was doing. So if you just look at the start of the day, obviously the market has been pushing down, right? You can see we've been pushing down. But one thing that kind of grabbed my attention is if you notice down here, this blue line, and I'll kind of highlight it. Okay. That is a linear regression channel 50. Okay. I use Thinkorswim to do all my charting as I trade options and equities with Charles Schwab Thinkorswim. It's my platform of choice to do charting for the futures prop firms. Now, I've got various different prop firms that I use. Apex, which has an 80% off sale right now, $85 activation fees using code DAnthony. I also use TopStep. I also use daytraders.com. I use Top One Futures. Those can all be found down in the description box below. But the more important thing here is this linear regression not only has saved my ass numerous times, it's also made myself money numerous times. And the reason being is these standard deviations off of the mean come into play, especially when you get to some of the extremes. So if you kind of just look at where we are at, right, in the grand scheme of things, I've got a top linear regression line here. I've got the mean here, and I've got the bottom linear regression line here. Now you can see I'm in California, so I'm going to speak in California time. At 8 a.m. Pacific Standard Time, we came down and tested this mean of the linear regression channel. What I would be looking for would be two things. If we bounce and get rejected and lose this linear regression, meaning we confirm the initial test, I would be 100% short, and we would be targeting a move down here to 24,871. If we hold, okay, like we did here, if we hold and we back test, what I want to see is a higher low be put in. Okay, so that's exactly what I see here off this wick. Now, I love seeing these wicks. I love seeing these hammer candles because it's showing you that there is some strength here. Okay, so you've got some strength here in buyers and you have a very defined risk. Your risk is the low of day. It's very simple, right? So this is the range that you're going to be willing to give up on this trade. Now, what I'm looking for to take entry is I want to see a following candle, boom, right there, take out the previous high of that hammer candle. Okay, so now I've got my range. So this is my stop loss. Okay, this is going to be my range here, and I'm going to sit in this trade. Now I've got a lot of supply. So I've got the 20 SMA supply, I've got the 100 SMA, I've got the 50 EMA, I've got the 200. I've got a lot of targets. Okay, we can look at all of these moving averages as price targets. So if I get into a trade, which I'm getting into the trade here, right there, the first immediate target that I'm looking at is once we get over that 20 SMA is right here. Okay, so it's right there. And that moving average is the 200 EMA. So from here at 24,043-ish, all the way up here to 25,063, or excuse me, from 25,043-ish to 25,063, you're looking at about a 20-point move. So that's a potential 20-point take profit. Now you can definitely trail your stop. You can definitely take a partial. You can hold a runner. You can do all sorts of things. You could target the next area, which was the 50 EMA, which is sitting at 74, which is another 10 points higher. You could have targeted 80, which is about another 13, 14 points higher, which is a 200 SMA. You can do all sorts of things. But for me, just targeting that most, let me take this off, that most immediate 200 EMA was my target. If we take out this hammer candle, I want to be long here. I already know that my stop loss is going to be below this buying wick. It's going to be anything below that linear regression. All I need to do is sit long through this, anticipating a breakthrough of that 20 SMA. Now, if we came up and I'm in profit and we came up to this 20 SMA and it got rejected, and it pulled back down, then sure, yeah, maybe I can take somewhat of a break-even stop. I can analyze that. I can manage that in real time if that happens. Again, In my particular case, I probably was not going to take that stop. I was going to give it the low of this wick to kind of take that stop. Now, again, on this trade, what I did is I entered in very small because the range on this candle here was 33 points. So I started off with one mini contract, okay, with one mini contract. And then as it started to push up and as this momentum started to break through this 20 SMA, I quickly added size, got all the way up to 5 minis. Why I did that was one and only one. We were already green. Okay, so we're already green on the day. So I do have some profits to play with. I've got some cushion there to play with. And two, once you can kind of feel that momentum start to really ramp up, as long as it's working in your favor, all you have to do is sit and hold. You already know where your stop loss is at. You already know where your break even's at. So even if I do add into this and it, starts to stall before hitting my target, and it starts to pull back, well, then I can cut it at break even or a small slight loss there. Again, the key to that is just understanding where do you want to get out. You have an easy out here and you have your absolute max pain there. Now, again, this type of move here, I will only look for later on in the day. Typically that's closer to lunchtime or typically that's after lunchtime. Because if you get that type of move early in the day, there's just a lot more volatility where it can do that kind of stuff and then bounce against you and then come right back down. It's just too much volatility. The range is too much. So for example, right now on a 5-minute time frame, the ATR is sitting at around 25 points. Okay, so it's not extremely high, but we also don't have a lot of the large candles, right? So off the open, you're looking at 55, 65 point candles, 53 point candles, 45 point candles. Here, we're looking at about a 20 point candle, 30 point candle, 22 point candle. These candles are a lot smaller. So when the range dies down a little bit, I can manage the trades a little bit longer. I can manage them a little bit better because it's not moving 40 to 60 points per one candle. So just wanted to bring that to light. Again, linear regression channel 50, even if you guys are trading on whatever prop firm of choice, if you guys can go out there, get a Charles Schwab account, get the Think or Swim platform and start plotting this linear regression channel 50, it will pay you dividends. I stand on it. I swear by it. It's one of the most respected indicators that I use on my chart. It's called linear regression channel 50. Okay, so again, there's no special adjustments, there's no crazy settings. Like, the settings are just standard. Like the input price is to close and that's it. Like I'm not changing nothing. I don't even think there's anything you can do to change it. It's just go to studies, right? So you can right click, go to studies, go to add study, and then you can do all studies and then go to the K-L, and then you scroll over to linear regression CH50. Okay, love this indicator. It's a fantastic indicator. It really, really helps me with targets. It really, really helps me with supply and demand. See you guys all in the next video. Smash that thumbs up button on your way out of here, guys. If you guys need Apex evaluations right now, 80% off with an $85 lifetime activation fee. You can't beat it. I'll see all of you guys on the inside.